What's up guys, Alvaro here and welcome back to the Bilingual Stock Market Channel. In today's video, I will be reviewing the technical charts of Tesla, Google and Amazon. And before beginning the content of this video, I wanted to show you this. Take a look. This is a video of Palantir that I posted on YouTube yesterday. And get this. This video was spoken in Spanish. You guys know that most of the content that I post in YouTube is spoken in Spanish. I used to make videos in both languages, English and Spanish, but after having done that for, I don't know, something like 2 years, I wasn't able to keep doing it. It was too time consuming and I didn't have time enough to keep doing that, right? So as of now, the content in English that I am posting on YouTube is pretty much live streams that I am making on Thursdays for the community of Christians that I am an advisor for his community. So I do live stream for his community exclusively for them on Thursdays, and once I am done streaming, I can release, or I am actually releasing those live streams for everyone on our YouTube channel. But YouTube just released this feature, and listen up. Again, this was a video that I made yesterday in Spanish, but take a look at this. Listen up.
Now, we went from a chart that on March 10th looked completely under the control of sellers to a chart that is currently completely under the control of buyers, and that suggests that higher prices are potentially coming for Palantir. If Palantir continues to rise, the next gap that this stock could fill would be up to $107.
So how about that, huh? It's dope, right? So from now on, I am going to try to make videos in English, let's say once a week, maybe twice a week, because now the viewers that watch my content in Spanish can also watch my videos in English. They just need to activate this feature, as well as you guys can also do it. Take a look. You have to go to settings and you need to pick audio track, and you pick English as the language, and that's it. You're going to be able to watch every single video that I post in Spanish automatically translated into English. This is great. A great feature that Google just released, or that YouTube just released, and you guys can take advantage of this in order to watch my videos that are spoken in Spanish automatically translated into English. So keep this in mind whenever you see any YouTube video from our channel with a thumbnail in Spanish. You guys know that you are going to be able to use this feature of YouTube, the automated translation. Super dope. I just wanted to let you guys know about this, okay? Okay, guys, so let's go over Tesla, which went up today 3.50%, and it closed the trading session at $288.14. This is a very tricky short. This is a 4-hour short, by the way. Why do I say that this is a tricky short? Well, because in minor time frames, we are seeing that buyers are making progress. Some sort of progress, let's just put it that way. Why do I say that? Well, because over here we can see an upward sloping 5-day moving average, or we can say that the 5-day moving average is starting to rise, rather, and the bulls were able to recapture this pink line. This is the 20-day moving average. So in minor time frames, we know for a fact that buyers have been stepping in this technical chart of Tesla. So Tesla closed today's trading session above a previous level of resistance at $285. This is a previous level of resistance back from early March. Say that tomorrow we see Tesla consolidating above this level. Well, a potential process of consolidation above $285 could be opening the door for a test of a previous level of resistance that also comes from early March at $305. This could be the next potential gap to the upside in the case of Tesla. But as I just said, guys, this is a tricky technical chart because in minor time frames, buyers have started to make some progress, but take a look at how Tesla is trading as of now below the 100, this blue line that I am pointing out with my mouse, and this green line, this is the 50-day moving average. And if we reconcile these two moving averages, the 100 DMA is signaling as of now $350, and the green line is signaling as of now $330. Let's reconcile those two moving averages with these two anchored volume weighted average price lines. So check this out. An anchored VWAP, or an anchored volume weighted average price line that comes from the most recent all-time highs of Tesla. Tesla hit $485. This was back in mid-December of last year. So an AVWAP that comes from that day is signaling as of now $340. And if we take a look at this other anchored VWAP that I am pointing out with my mouse that comes from the day of the presidential election, this was back on November 5th of last year, we get an average price of $335. So we know for a fact that we have buyers trapped at $345 and also a lot of buyers trapped at $335. What do you guys think that these buyers that are trapped at these levels will do whenever Tesla hits these two levels once again, either $334 or $340? They are very likely to close their positions breaking even. They are holding the bag. No one likes holding a bag. So the main problem that Tesla is going to be dealing with as of now, and this is a situation that will be potentially affecting the other magnificent 7 stocks such as Google and Amazon, which I am about to review, is the fact that we have a lot of overhead supply as of now. What do I mean by that, guys? That if you were able to start a position on Tesla at $225, $210, or I don't know, $253, and if that position is a short-term trade for you, you should be thinking about maybe taking some profit here on the way up, because a potential further process of recovery in the case of Tesla is very likely to, let's say, meet or coincide or face a bunch of potential levels of overhead supply above the current price of Tesla. So between $332 and $350, we know that we have a very important potential level of overhead supply for Tesla, from which this stock could be pulling back. In the short term, as I just said, guys, the next potential gap to the upside would be $305. If we happen to see profit taking over here, which could be the case, guys, Tesla has gone up since March 10th. Let me see, almost 36%. This has been a very decent rally. So in the case of a retracement, in the case of Tesla, I will be looking at $273. This is a previous levels of support as well for Tesla back from early March. And if $273 happens to be broken to the downside, I would be curious about Tesla being able to find support near $256. This is a level at which the 20-day and the 5-day moving average are coinciding as of now. So to the downside, I might be a buyer of a dip in the case of Tesla at $272, or why not $256. And to the upside, keep an eye on a potential process of consolidation of Tesla above $285, because that could be potentially opening the door for a test of a previous level of resistance back from early March at $305 approximately. If we take a look at the market structure of Tesla, what do we see here, guys? This is a market structure chart. This is a tool that I use in order to visualize imbalances between the demand and the supply of any given stock. So what you guys can see on top of this chart is the demand, or buyers, and what you guys can see at the bottom of this chart is the supply, sellers. So take a look at how the demand, which is represented by this blue shaded region that I am pointing out with my mouse, pretty much collapsed, and it is starting to rise. This is positive. The supply is also rising, as you guys can see over here, supply sellers, and actually the level of the supply is higher relative to the level of the demand. But the fact that the demand is rising once again after having plummeted, as you guys can see over here, is very positive, and we can actually reconcile that market structure chart with this white line, with this 5-day moving average that is starting to rise. So we can confirm that in minor time frames, buyers started to show up because the demand is rising once again. That is positive. So I wouldn't be surprised if we see a test of $305 coming up for Tesla. But mind you guys, we have a lot of overhead supply as of now. This is backholder central. So again, if I had a winning position on Tesla, I don't know, unless you guys are thinking about investing at a long term in Tesla, because Tesla is the future, bro, and Tesla to the moon, bro, and whatever it is. Well, that's a whole different situation, right? But if you just have a winning trade, be careful, because we have a lot of overhead supply over here. And by the way, guys, keep in mind that Tesla, and this is very important, put this down on a sticky note, Tesla will be posting its delivery numbers for Q1 and for the month of March somewhere next week. And those delivery numbers might not be very positive, maybe, because all of the bad news that, has been surrounding Tesla, let's just put it that way, and Elon Musk and stuff like that. So that is something to keep in mind if you also happen to have, or if you have a winning position on Tesla. Okay, let's go over amazing Amazon. What is going on over here? Amazon goes up 1.21%, and it closed the trading session at $205.71. So the same situation that I just told you guys about in the case of Tesla. In minor time frames, we are seeing that the buyers are starting to make some progress here, but in major time frames, we can point out that Amazon is still guilty until proven innocent. And why do I say that? Well, because Amazon is trading below the 50-day moving average and the 100-day moving average. If we take a look at some anchor VWAPs here, in the case of Amazon, and as you guys can notice, I use a lot the anchored volume weighted average price lines. Take a look at these, guys. If we take a look at an anchor VWAP that comes from all-time highs in the case of Amazon, Amazon hit or reached $241. This was back in early February. Well, we get an average price of $210. So what information is this anchor VWAP sending us? That the average market participant that started a position in Amazon back in early February has an average price of $210. So these market participants as of now are losing money with Amazon. So as of now, this could change if Amazon is able to burst above $210. Those market participants represent a potential level of overhead supply for amazing Amazon. If we reconcile this anchored volume weighted average price line with this 4-hour chart of Amazon, take a look at this. So at $212 in the case of Amazon, we encounter, let me zoom in here. No, I don't need to zoom in. Take a look. We visualize here a former level of resistance for Amazon, $212. And take a look at how, guys, both the 50-day moving average and the 100-day moving average are very close to this level. So between $218 and $212, and let me pull up here once again this anchor VWAP. So from $210 up to, let me pull up here once again the 4-hour chart, up to this 50-day moving average at $217, we are talking about a potential level of resistance or overhead supply at which Amazon could be having difficulty trying to burst above that level. So for me, in order to determine or to let's say that Amazon is innocent until proven guilty, as of now is guilty until proven innocent, I would have to see Amazon bursting above $218. This would be a very bullish development that, in my opinion, should be attracting sellers into this technical chart. But let's say that, I don't know, in the very short term, could there be more upside for Amazon? It's possible. Take a look at $205. $205 happens to be a previous level of support for Amazon back from late February that now could be acting as a new level of support. So a potential process of consolidation of Amazon above $205 could be opening the door for a test of precisely the previous level of support that I just pointed out at $212. So in minor time frames, guys, Amazon is trading as of now above the 5-day moving average, the 200-day moving average, this red line that I am pointing out here with my mouse, and also the 20-day moving average. This is positive for Amazon. So we could be seeing higher prices, but from $210 up to $217. That is going to be a level at which we could be seeing a very interesting bull bear battle. And if Amazon happens to be able to burst above $218, well, that's a whole different story. In my opinion, as I just said, that could be attracting a lot of buyers into this technical chart of Amazon. If we take a look at the market structure of Amazon, let me take a look at the supply and the demand of Amazing Amazon. What is it at? Do we have it here? This is Google. No, I don't have it. No, it is. There you go. It is here. Okay. Take a look at the market structure. It doesn't look as promising as relative to the market structure of Tesla. So take a look. The demand started to rise, but now it is kind of flat, and the supply is starting to rise. And we can actually say that the level of the supply is actually higher relative to the level of the demand. So this market structure makes me be a bit more cautious in regard to Amazon. So say that Amazon can't hold or is not able to hold $205 as support, the previous level of support that I just pointed out. Between the 20-day moving average and the 5-day moving average, remember the 20-day moving average is the pink line, the 200 is the red line that I am pointing out with my mouse, and the 5 is the white line. So between $198 and $200, we can expect some sort of potential level of support from which Amazon could be bouncing back up in case of a retracement. Sorry, guys. Why do I say that? Am I expecting a retracement in the case of Amazon? Maybe, because the supply is rising and the demand is pretty much flat. It isn't rising. So I might be, I am going to keep an eye on Amazon in case that this previous level of support, that $205 is broken to the downside, potentially being able to find support between $200 and $198 approximately. And above $218, I think that Amazon is off to the races. Let me now go over Google. Let's see. And I think that I forgot to point out the 200-day moving average in the case of Tesla. So I will be circling back to Tesla before wrapping up this video. Okay, Alphabet goes up today 1.68%, and it closed the trading session at $172.79. Take a look. Pretty much, or actually, the very same situation that we just saw in the case of Amazon and Tesla. Take a look. So Alphabet is making progress in minor time frames. We can see the 5-day moving average, this white line starting to rise, and the bulls of Alphabet were able to recapture the 20-day moving average. So this is positive in minor time frames, but take a look. In the case of Google, we are also seeing this stock trading below the 50 and the 100-day moving average. And actually, these two moving averages are coinciding as of now, as you guys can see on this 4-hour chart. And these two moving averages are coinciding at $183. So let me go ahead and pull up some anchor VWAPs in the case of Google and take a look. The anchor VWAP that comes from all-time highs in the case of Google is signaling as of now $176. If we reconcile that moving average with this 4-hour chart, take a look at this. $176 happens also to be a previous level of resistance for Google back from early March. So if Google keeps going up, the next potential gap to the upside would be the one that could take Google up to this anchor VWAP, or up to the anchor VWAP that I just showed you guys, and that comes from the most recent all-time highs of Google at $176. On top of that, Google already failed twice trying to burst above $176, as you guys can see over here. So this is a spot at which I am expecting, to say the least, a good old bear bull battle, and Google maybe could be potentially pulling back from this level. In case of a retracement, guys, the 20-day moving average is signaling as of now $170, and the 5-day moving average is signaling $168. This could create a potential support zone as I just said, between $169, $170 and $167. So in case of a retracement, and in case that obviously that the markets are not falling apart because Trump said this or Trump said that, keep in mind, guys, that when I carry out my technical analysis, I am talking about potential levels of support and resistance that could be acting as such unless we have very bad news coming out and the market's freaking out because Trump said this and Trump said that and the world is going to end. You guys, know the drill, okay? So my technical analysis could actually work out in regular market conditions. If the VIX is rising, and the media is saying that the world is going to end and fear gets out of control, then that's a whole different story, right? Just in case. So, potential level of support between 170 and 167 bucks. I would be curious about Google maybe pulling back at $177, but if the opposite happens, if the bulls are able to reverse above this previous level of resistance that is coinciding with the anchor VWAP that comes from all-time highs, say that Google starts to consolidate above 177 bucks, that could be signaling that the bulls are gathering momentum in order to fill this next very important gap, I would say, or not next, the second next important gap up to the convergence of the 50 and the 100-day moving average at $184. Say that we are able to take this trade the way that I am describing it over here, guys. So say that we start a position on Google at 177 bucks. And if we can close it at $184, it could represent a 3% profit trade. Nothing to sneeze at. So keep an eye on Google from 177 or consolidating above 177 up to 184-ish. Above $184. And as I just said in the case of Amazon, above the 50 and the 100-day moving average, Google would be off to the races. And in case of a pullback, I would be curious about the potential support zone between 170 down to 168. Let me take a look at the market structure of Google. What do we see here? Take a look, guys. The demand is starting to rise. The supply is also rising, which isn't good. But whenever we see the demand, and remember, this is a market structure chart. On top of the chart, you guys can see the demand or buyers, and at the bottom, supply sellers. But as long as the demand is rising, that's positive. And we can actually reconcile this market structure chart with this 4-hour chart in which we see the 5-day moving average rising. So I wouldn't be surprised if we see a test of $178 in the case of Google. And I forgot to mention, guys, the 200-day moving average in the case of Tesla. And you guys know that my videos are always like 100% improvised. I don't prepare anything, okay? I don't have time to prepare anything. Okay, in the case of Tesla, guys, the 200-day moving average, take a look, is the red line that I am pointing out with my mouse. Check this out, guys. I told you that in the case of Tesla, $285 was a previous level of resistance. That could be potentially acting now as a level of support. And I already told you that there's a gap up to $305 that Tesla could be, filling anytime soon if the bulls are able to consolidate above 285. But $285 becomes an even more important level for Tesla because it is a previous level of resistance that, as of now, is coinciding with none other than the 200-day moving average. And the 200-day moving average is a very important moving average for any stock out there. So above 284, 285-ish, be careful with a gap filled up to $307 in the case of Tesla. And with the 200-day moving average of Tesla, I am going to wrap up this video. You guys already know what to do. Subscribe to the channel, hit the like button, drop a comment if you want. And again, guys, I think that now that we have this automated translation feature available on YouTube, I am going to be making more videos in English, and my viewers in Spanish, or my Spanish-speaking viewers, can also use that automated translation feature in order to watch my videos in English and Spanish. So this is a win-win. Wow. So see you guys in my next video. Take care. Enjoy the rest of your day. Bye-bye.